Hi guys, and welcome back to my channel where grit and perseverance always pays off. So the question that comes to me a couple of times, more than a couple of times, is how do you prepare for your day, right? So how do you do your setup properly? And the answer to that is a long-winded answer, but I'll keep it short. You prepare for your day the day before, right? So you ensure that you have a clean mindset. There is obviously, you want to make sure that the noise in your heads, all the distractions are away. Before I sleep, I always on my phone look at the charts just to reinforce my own process that I've been executed for a long time, which I'm sharing with you here now. And then I look at those entries, right? So did those entries give me a winner? Did those entries give me a loss? And then I basically have a quick study right before I go to bed on what I need to do and what I don't need to do. So in the morning when I come to my charts, I'm actually prepped. Before I even look into the window, right? So I sit a couple of minutes before, just looking at the charts, right? So telling what the candlesticks are doing. Where is the trend stronger? If the trend is stronger before my trading window opens up, then maybe it might be a day where I don't trade. If the trend is kind of flat, maybe when the window opens up for me to trade, the trend is strong, right? But that's all, that all takes the backside to when actually the candlestick starts printing. And today is a perfect day where I'll show you a couple of trades both on UJ and GU on how damn simple this entire process is. You don't need to make it complicated. What you need to do is make sure that you embed this as part of your subconscious, right? It should be impossible for you to learn another strategy. It should be impossible for you to see anything else except what I show you here. So let's dive into this, and I've pre-marked because these are the trades that I did take. So let's look at this. My London window opens. I'm looking at UJ. Right, so the first candle opens up and there is no trade there per se, right? So there is nothing that is happening in the first candle. In fact, let me see, because I did not trade the first candle right here. Let's see if there was a trade. So this low broke that, it got broken here. This low did not break here, so it's we're on the first, so there was no trade. And this is, you see what I did here? This is how fast you need to be in looking at your patterns and looking at your charts to tell exactly if there's a trade or not there. But this one, there is a trade, right? So I wait, I see a clear trend established, and I can confirm it over here, right, on the 1 minute chart. So let's look at what's happening on the 1 minute chart. You have your higher high, higher low, higher high. It fails to break the low over here. It tries to wick it. So basically what it's doing is kind of grabbing all the liquidity at the backside for fueling the move that is going upwards, that huge massive trend, right? And then I know for a fact that the trend has shifted because this high broke and then it had candle body closures over here. So for me, fantastic opportunity. Let's look at this box and let's analyze what's happening inside this box. Okay, so this is when the new candle starts printing. I'm interested in catching the wick of the second candle. So this candle right here is what I'm interested in, and what have I been telling you, right? So what do I need first? A pullback, and then I need liquidity sweep, a strong or a weak liquidity sweep, and then I enter. Where do I have the liquidity sweep? So I start following the lowest. The low is where this is the low point. There's nothing here, and then of course this is the low point. So if price did ever come to this and wicked, I'll probably place an entry over here. But this is the low point right here. I take this, mark it as such like that, and I can even give it a template. So that's my 1 minute liquidity. This low broke this high over here, and then it got swept. And then I place a stop order as such, 3.9 pips, and that's your winner, 3R. At this point in time, you can close your day and you're done. First 15 minutes, 30 minutes, within the third candle, I have placed my trade within the 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Within 15 minutes or so, I made my 3R and I could walk away. This is how simple it is. You do not need to make it any more complicated. You could have broke even at 1 hour. You could have done 2 hours. You could have followed do the trailing stop for your trade management. There are too many things that you could have done this, but this is how simple it is, right? Let's move on, right? So there are a couple of more trades. So let's look at the New York session now, because this was a nice little trend that was developed here. Okay, so what do we know? Why am I collecting this? Because now it's inside my window. I have established a trend. So higher, 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 low, higher, high, higher, low, higher, high, higher, low. I'm reading the wicks over here. This low created this high, and then it broke right here. So the trend has been established that it is downward, right? This right here, this part. So if I were to draw this here, 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 here. So this part, until it broke this right here, all of this is internal trend. This is your major trend, which then broke here. So if I were to make a larger this, and then this, right? So this is your larger trend. And within that larger trend, this is your internal trend, right? So you follow the larger trend and you follow the internal trend. Ideally, I follow the internal trend and I give it more weight, because that is the immediate trend that I want to trade. I'm not waiting for these swings to happen and that swing pullback to happen. I want to get involved when this is forming, get in and get out. That is my story, right? So let's get rid of these. So we established we are in a downward trend. This is the candle that I'm interested in. I want to catch the wick right here. So let me zoom this in for you a little bit. I want to catch this right here. And how do I do that? So we come in down. My second candle starts printing at this point in time. So where are my liquidity points? I have two liquidity points. So this high, right, broke the low here, and then it got swept. So let me zoom that in for you to make it a little ample clear that how even small liquidities, even though they are just tiny bids, they work, right? So, and this is an evidence that it works. I wasn't waiting for, ideally, this would have been perfect. So this would have been a very nice liquidity point where 100% I would have been involved. This also is a valid point because this high broke this low and then it got swept. It also swept this high because this candle right here, the wick of this candle swept the previous highs, the wick of the previous candle, and then it closed strong below. So there is definitely something over here also. So it broke that as well. So I could even count this as liquidity point right here, right? So once this happens, all my, my systems is a go. I want to place a short. Now I could avoid this. Yes, you can. But why would you want to do that? Because you are trying to play your process. You have to have a rule within your process on why you would not enter this trade. If your process says that no matter what happens, if there is a liquidity sweep, you're going to enter, then you better enter, right? Because you're following your process. If your process says, you know what, this is tiny candles, the liquidity is not that great, the stop loss, the formation is pretty tight. It might just wick me, tag me in and take me out because the stop loss is going to be extremely tight on this one, 1.7, and of course I give it till 2. That's okay, but you need to follow your process. If you want to wait for clear liquidity up here or even up here. So if the price went like this and this was this would have been a fantastic sell opportunity right here, right? But sometimes the markets are moving faster. This liquidity, which is somewhere around at this point in time here, this would mean that it has a giant wick. But once the market is moving, it's moving, you will see a lot. I mean, this one does not even have a wick, so there's no way I could get involved in here, right? So sometimes it moves and you need to capitalize on this. And look at this. Boy, did this pay off, right? So you got involved and this gave you, what about looking at a 12-hour trade if you kept it all this way? You could, again, play partial profits. You can trail your stop losses. You can lock yourself in after a certain fixed hour. It's all up to you. But this is how you get involved. It needs to be this simple. I will give you another example right here because now look at this. Yeah, 1, 2, 3, 4, 5 15-minute candles, 1 hour, 15 minutes. The trend has been downward. So Once it starts going like this, I am wary of getting involved in downward trends before a pullback happens, right? So, but the process says as long as there is an opportunity, there is an opportunity, right? So I highlighted this candle right here, hoping that it will go next in the downward trend. But this one, unfortunately, was not a winner, and not all are winner. And I want to give you a sample of this. The price swept here. This is a perfect liquidity point where it took. Yeah. Rest of them, no high broke a low in order to be swept. This is the only high that broke this low, and then it got swept. And ideally, you would have placed your short right here. Stop order. And this is 2.6. And this is where I tell you sometimes what happens is it might tag you in, it might go out. It could also happen that you could have placed your stop order over here because could be that the price broke the high of this candle first, right? So if the high broke first, immediately you cancel the order, you wait for the next candle to finish in printing, and that's when you order. Again, this one broke the high first, so we had no tag. We place our stop order here. It's a 1.9 pip stop loss. You could have gone 2, and you would have had an easy at least 3.9 hour trade almost, right? And if I took the whole thing, almost a 4 hour, but definitely a 2 or 3 hour trade, right? How simple is this, guys? Come on now. How simple, right? All you're doing is playing the candle trend. You look at these candles. How do you get involved? The fundamentals of a candle is a wick and a body. How do you get involved in catching that wick? There's nothing more to it, right? So let me jump to a couple of more trades. So this one is on GU. Let's look at what we have here. So let's look at the down one. This, as soon as London opened, a massive print of a bearish candle. I have it already marked for you. Where would I enter on this trade, right? So let me pause this video and you tell me, right? So this is a clear high point. That high point did not break the low till this, so the trade is eventually over. So this would have been a larger internal trend, right? Or even an external trend, because this low created this high, this low created this high, this low got broke, and now we are in a downward trend, right? So this is an internal trend. This is the larger trend, right? Anyways, so where do I find my liquidity points? My liquidity points would be within the internal trend, a high that breaks the low. So this would be one, right? My next liquidity point would be where? A high that breaks a low. So high that breaks a low here and then gets swept. So this candle is responsible for breaking 2 liquidity points, and then I place an order. I'm pretty sure that the top broke first, so I'm not entering. Place an order right here, kill out my stop zone at 3 pips, and wait for my 2 pips or 2 hour trade or a 3 hour trade to get formed. Where did it go all the way? It did go to 4 hour, but I do a 2 hour trades, and this would have, if you went larger and you have some sort of a trade management with break evens, you probably would have gotten a break even on this one, but it did give you 2 hour before it retraced back, right? So let's move on to another one. So these candles, I'm not interested. I mean, they are not telling me anything. The wicks are huge, the bodies are small. There is no directional bias. I mean, there is a massive wick here trying to push up, but then it closed bearish. Nothing really happening until this candle prints. Again, this is towards the end of my trading window, but I wanted to still showcase this to you, that trades are all over the place. You just need to watch and know what to look for. Put my box up there, nice purple box. Put my liquidity point right there. And so this high broke this low, got swept. Did a short order right there. Capitalize the top. 2.3 is fantastic. You get tag 10, and that's your easy 3 hour trade. That's it, folks. How easy is this? Do not make it complicated. Do not there is no massive rocket science. Of course, if you want to go into algorithmic tradings and risk management that big hedge funds use, and they use all these tools and statistic analysis for all of that, but they're playing with huge amounts of money. And when you're obviously investing that much of money, you need as much surety on your side that probabilities stack up. But for us, average Joe retail trader, how do I make money out of this, right? I am not a statistician. I'm not a mathematician. I haven't studied game theory and chaos theories. I'm not interested. My life is complicated as is. I don't want to make things more complicated. I want it easy. And the easiest thing is probably catching the wick, right? So you focus on your 1 15-minute candle and try to catch the wick on the next one. All right, y'all. You take care. Cheers. Bye now.